So, good morning, everyone. My name is Mohammed Alsobay. I'm a senior data scientist at Mozn. Mozn is great. So, we're an impact-driven group of engineers, scientists, and analysts. And what we do is we employ data science to build products that change the way people work to deliver actual outcomes on the ground, right? So the way we do this is we start from a business problem and we work backwards. And we find the technology, the mathematics, and the data we need to build a solution that solves that problem, and then we keep iterating over that as we go. Today I'm here to talk about a very specific business problem that I think is pretty widely felt and experienced in a range of industries, and that's fraud. So we have three main objectives through this talk. I'll try and achieve this in 20 minutes. The first is we want to define and understand digital fraud. The second is we'd like to visualize what does a fraud detection process look like, and how, because it is more than an engine, it's an entire process and needs to be embedded in the way that you do your work. And the third is we'd like to explore and plan what it can look like in organizations of different types and objectives. So fraud is deception intended to achieve a gain. And that's a very broad definition. We can see this in a very wide range of fields. So for example, when we think about retail and e-commerce, right, this can be claiming that you never received an item to get a refund. In cybersecurity and digital identity, this can be identity theft. This can be impersonation. Finance and anti-money laundering, governance and compliance concerns the flow of money. Is the direction a valid one? Are the transaction sources and destinations valid? These are all things that can be fabricated and lead to fraudulent transactions and associated costs. So just to put this in context and why we should care at all. So the global spending on fraud protection is about $13.59 billion today, but is expected to grow, right? So if the protection is growing, then the problem is also growing as well. Now, if we think about domain-specific indicators of fraud, right? So Stripe, one of the leading digital payment processors, reports that on average, every $1 of fraudulent orders leads to $2.62 in fraud-related costs, right? So this is the cost of chargeback, the cost of refund, the cost of receiving a good to someone who was sent something on a fraudulent order. But something that's a bit more personal and could potentially affect all of us is digital identity theft. So the website Have I Been Pawned is a digital repository of password leaks and identity and credentials that are basically published in the wild. And so per their report, there are 1.4 billion compromised accounts in 2018 alone, right? So these can be accounts on social media, on banking, on retail. So it's a really widespread problem. But fortunately, because it's becoming a more digital problem, we have data that we can use to characterize it. So businesses respond to fraud in different ways, and they have different ways of treating it, of detecting it, but they all follow a general framework. The first is that a new transaction occurs. So this can be a purchase, this can be a transfer, this can be registration, login, etc. And the transaction is flagged somehow. And so organizations can decide to do binary flagging, so they can say fraud or not fraud. They could say fraud, may be fraud, and definitely fraud, or not fraud. And that really depends on the business and how they want to approach the process and deal with it in their own way. Once you have a flag, an action is taken. If it's a benign transaction, let it go. And if it's fraudulent, depends on the business. Sometimes the cost of dealing with something is greater than the cost of fraud itself. So it's really a domain-specific problem. And depending on the organization's maturity, results from that action can be fed back into your fraud detection system to make it more effective to the threats that are faced by the organization itself. So this is a general framework or a blueprint for what a fraud detection process can look like. Now, all of what we described can be done manually. You can have a guy on the desk, maybe supported by an Automation Anywhere bot, and he's analyzing, he's looking at files, but he needs to make a lot of decisions in a very short time frame. As digital channels increase, and basically we're all migrating to consuming digital products and goods, we need solutions that can scale with the scale of the problem and the scale of consumption. So a successful AI-driven deployment should be able to deliver 4 key components. The first is speed. So if we look at Spreedly, which is a payment provider, they surveyed 100 different processors. And the average time to process a digital payment is 1.37 seconds. So you need to make a verdict in that time. Should you reject the payment? Should you accept it? The second is it needs to be cheap. So here we're talking about human cost, right, which we can help overcome with automation, but there's also business cost. There's the cost of doing a chargeback. So that's when you refund someone an amount on a credit card. That's the cost of sending an item back. There are business costs associated with fraud. The third point is comprehensiveness. So we need systems that can look at cases in context. The thing about fraud is it depends on the cases surrounding it. You can look at a case in isolation, but if you don't see how it relates to similar cases, you might miss patterns that are of interest. And so AI systems, and we hear a lot about big data, they can ingest all of this context at once. And the fourth component is performance. You need something that is reliable. You're building your business, your bottom line, on the ability to detect these fraudulent transactions and prevent them from affecting your business. So when we think about what it means for an organization to migrate to digital fraud detection and protection, there are a couple of different components, and these are the major ones that I've chosen to highlight because we see them pretty frequently, that can affect the friction of migration. So the first is business domain. There are several commercial products today that will address commonly encountered forms of fraud. So when we talk about financial fraud, when we talk about, for example, retail fraud, these are things for which commercial products exist. However, the more unique your business case, and for example, when we think about governments, when we think about local markets that might not be served internationally, the business domain becomes a lot more niche and requires specific analysis and focus. The second is previous experience. So if a company has experience identifying fraud and knows what it looks like in their business line, then moving to digital solution becomes significantly easier by virtue of their experience and by virtue of them having labeled data, right? So it becomes a supervised exercise in that case. However, if there's a weak definition of fraud, that means that they likely do not have data as well, which can complicate things a little bit. And the third component is data readiness, right? So the idea here is when you want to make a judgment about a transaction, the more information you have, the more you're able to understand what's going on. So consider, for example, e-commerce. I have 2 transactions coming from the same credit card. One is the real person who owns the credit card, one is another person. Now, just based off of what they bought in the credit card, I might have difficulty ascertaining who is who. But if, for example, I'm capturing the user's behavior on my website, then I know that, for example, the real customer is a frequent visitor. He tends to browse in a certain way. This fraudulent visitor browses in a different way. So adding that layer of information, which is user interaction, gave us another angle at which to look at the fraud case. And so the more comprehensive we are about a case and the more accessible that the data is to a digital system, the lower the friction of adoption is. And so Mozn's approach is embodied in Signal, which is a workflow and set of tools designed for the toughest cases. So we approach cases where the data available is limited, it's in difficult to access silos, and there might not be any labeled data or understanding of what fraud looks like, right? So if we start at T0, which is today, right? Unsupervised methods allow us to find things that are unusual, right? So we can do this with data that exists today. Given the assumption that most people are telling the truth, can we find the weird ones, right? That might be a hint of where fraud is occurring in our organization. And as we increase in maturity, we add a few components. The first being feedback loops. So we begin to present these unusual cases to the organization and get feedback on what are you seeing in terms of a business impact. Once that feedback is integrated, you can begin adopting supervised and unsupervised methods, right? So you can use supervised methods to target known modes of fraud, but you still want to keep the unsupervised methods, the anomaly detection, the weird ones, to be aware of any new threats as they emerge. People might have a certain way of tricking a business today. They'll definitely adapt to whatever protection you adopt tomorrow. Eventually, far into maturity, you can move to a model of automated decision making and detection. So saying for a certain type of fraud, we should deal with it in a certain type of way, and this should be automatic. We don't necessarily need human involvement. And so because there's a low requirement for labeled data, T0 could be today. We can start working on finding unusual patterns in data without a lot of information on sort of what the outcome for that data was. So this is an overall schematic of the signal process flow. And at the beginning, there's a high degree of involvement in building data and organizational pipelines, right? So we start with raw data, and we apply data cleansing and feature engineering to that data. Now, feature engineering is important because it's the input to your modeling, it's the input to your engine, and it's really domain specific. So what works for one type of retailer might not work for another type of retailer or for a delivery service, right? And we find the pieces of information that matter to each business uniquely. Now, at the beginning, as I mentioned, you want to find the weird things, but what do you do once you've found something weird, right? You need an estimate of what the value at risk is. So if I suspect that someone is, for example, defrauding my business, but he's only, for example, stealing 2 halala, and I suspect another person is defrauding my business on the tune of 10,000 riyal, right? I obviously want to prioritize the one that is costing me more, and that is where the case prioritization and review portal comes in. So this takes the output of the engine and says, based on your unique business context, this is where I think you should focus your manual inspection effort first. And then that input can go in 2 directions. It can go back into the detection engine to improve the output, and it can go onto business lines to take action as necessary. Now, deep into maturity, the detection engine changes to detect the modes of fraud that we know exist, as well as detecting new ones. And we can make automated decisions as well. Now, if we think about what each component is solving, right? The data process, so when we think about Mozn's data cleansing approach and the ETLs and the processes that we introduce to an organization, we make sure that there's fresh and reliable data at every instance that we need it to be there. The second component is that we need to focus on known and unknown. I cannot understate how dynamic this problem is. And the trick here, or the challenge, is in finding latent patterns. For example, when you think about if you think about fraud in tax, there's a very common scheme called the tax carousel. This is known by any auditor, and they know it very well. But there are patterns that are not in textbooks. There are patterns that are hidden and latent, and you want to build your system to be able to find those as well. The case prioritization allows analysts to make the most use of their time. You want them to, every minute spent is an opportunity to recover revenue, and you want to make sure that the recovered revenue is maximized. And feedback is how you ensure sustainability and continuity. You want performance, and that performance needs to be consistent and reliable. So fraud detection is both a business and technical exercise. There are technical decisions to be made, so what models should you be using, how do you tune them, what databases can meet your speed requirements, and those depend on each business's individual needs. But there are also business-based decisions. So for example, once you've found fraud, what do you do with it? So can your analysts understand what is going on, and are there cases where you might want to ignore fraud altogether, or are there cases where you might want to take an extra 2 or 3 steps? And what impact does that have on your bottom line? The second question is the output of your detection engine presented actionably, right? So typically when people think of a model, they think of math, input numbers, output numbers, right? But numbers are not actions. Numbers do not tell you what to do. And the people who are doing the job do not want to be looking at numbers all day. They need to be looking at actions and insights that tell them how to proceed. And so making sure that the system that is in place allows these analysts to proceed with minimal cognitive load is both a business and technical design challenge. And the third is, how does your line of business affect the way that you tune your models? So for example, there's in this kind of field, there's something called the recall precision trade-off. So what is the cost of mistakenly flagging an account as fraudulent versus missing actual fraud? Right? And you will need to make a trade-off between these. For some cases, flagging something as fraud might lose a customer forever. So you might be a bit more willing to lose some actual cases of fraud. Now, to close, I'd like to leave you with a few nuggets of food for fraud detecting thought. The first is that, unfortunately, I hate to be the pessimist, but the problem of fraud and fraud detection is only going to get worse. Digital channels are growing, and it's incredibly cheap and easy to scale these attacks. So it's not going to get easier on its own. The third point is that it's a very personal exercise. For some businesses, it's important. For some businesses, it's less important. And you need to figure out where in the process it's affecting you and what actions you should take based on the knowledge of what is fraud and what is not. And the third point is to start today. A common theme is sort of waiting until you have the perfect architecture that can empower all your AI-driven initiatives. But in my personal experience, the clearest requirements emerge when you face your system's shortcoming on the field. And with that, I thank you for your time. I can be contacted through any of these channels, and you can visit us at our booth right outside. Thank you.
Thank you, Mohammed. That was quite enlightening. Now we're going to take some questions, so please do raise your hand.
Thank you for your presentation. It was very interesting. I have a one question. Do you guys provide the experts, or do you provide the expert with the tools, or do you guys use standard tools? How do you do your operations?
Sure, that's an excellent question. So the way that Mozn approaches Signal is the same way that we approach all of our engagements. So we think that data science is most employed when we look at it from the business side and the technical side. So on a typical engagement, what you can expect is an infra engineer, a data scientist, for example, and a business analyst. So these three will collaborate to understand why it's important to you. They won't start building models immediately, right? They need to make sure that they're building the right thing. And then they will build whatever IT is necessary to deliver that impact. So there's ground up building rather than a ready product. And whatever components that we believe are applicable to the specific need can be either customized to meet your need or built from the ground up if we don't have something that meets that need already. But the idea is that you will have business and technical people building technology within your organization.
One question there.
Thank you for your great presentation. Sara Al-Hamoud, a computer scientist and the general manager of Gifted in the Ministry of Education. I just have a small question. How do you foresee the horizon in terms of fraud detection in financial institutions like banks? I remember having a phone call before 10 years ago for a fraud detection operation in UK. How do you foresee that in Saudi Arabia?
Sure.
I want to hear that.
Absolutely. I think it's a very good question. And I think sort of in Saudi Arabia versus international, the standardization of finance as a field means that we'll probably proceed at a similar pace. But what I see happening in finance in general is that before, banks used to be relegated to the pieces of information that they had readily available, right? So they knew your financial history, they knew your habits, they knew where you spend money and how much you spend, right? And that was the information they had. But now, as more of our identity is online, they have access to more pieces of information about you, right? So for example, there are data brokers that say, I have these identities in my database, these are their profiles, so this is where they work, this is where they live. And as more of those digital traces of our identity become part of a bank's database, it becomes easier for them to make better calls, right? So recall the point I made about comprehensive information, right? Now they have more angles about who we are as people, and so understanding our behaviors and what is unusual or what is not us becomes easier for them. Unfortunately, with the emergence of e-banking, it's only going to become a bigger problem, and there will be more avenues of attack, but I think the growth of data, and our growth in capacity for analysis is, I guess, an equal match for that growth in opportunity in attack.
So thank you very much,
Thank you.
Mohammed.